Hi everyone and welcome to the channel. Today our focus is going to be on the company Microsoft, ticker MSFT. They just released their Q2 results, which was a record quarter driven by their cloud platform, surpassing $33 billion in revenue, which accounts for just over 50% of the total revenue for the quarter, along with continued development of their AI technology and incorporating it into their products. In this video, we'll look at Microsoft's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling the forecasted 52-week stock movement. So let's jump right into it. Here's Microsoft's financials, and first I'll point out that the far right bar in each chart represents the trailing 12 months, so taking into account Q1 and Q2 of 2024 and Q3 and Q4 of 2023, since Microsoft's fiscal year spans from June to June. As we look through these results, we're going to see pretty much consistent growth over all these data points. So we're starting off in the top left for revenue, which has seen an annual increase since 2016, up more than 140% over the past 10 years for the top line, with the trailing 12 months at nearly $228 billion. While net income experienced a 35% decline in 2018 and a slight dip in 2023, but trailing 12 months is trending upward, and since 2015, this is up over 575%, providing increased profitability over this time period. For earnings per share, besides the down year in 2018, it has been increasing in over the decade, up nearly 650%, and currently at $11 per share. Now, for both net income and earnings per share, both of these demonstrating very impressive growth over the decade. Now, book value per share, that's been growing also since 2016 and gaining 180% over the last 10 years. And then dividends and shares, two data points I really like looking at. If a company pays a dividend, I want to see that growing over time and the share count declining. And Microsoft has done both, with dividends growing every year at a rate of almost 10% a year, while shares have been declining at an average rate of just over 1% a year. Free cash flow and free cash flow per share both having a slight dip in 2023, but each of them recovering for the trailing 12 months, and overall free cash flow has CAGR'd at more than 12% a year and up 180% during the decade, while on a per share basis, it's up more than 215% for the period, helped by those reduced share counts. And then revenue per share having outstanding growth as well, increasing more than 170%, driven by both the increase in sales and reduction in the share count. So very impressive results for the company, especially a company this large with the ability to sustain such growth. Now let's move on and we will perform the stock valuation. Here's the valuation for Microsoft, and we will look at making some modifications shortly. But what I have for intrinsic value is just over $328, and with a 90% margin of safety brings it down to just over $295, while the current stock price is trading in the $400 to $410 range. Now, my evaluation is based on a 20% short-term growth rate over the next 10 years with a 10% discount rate, and I am also using a 3% long-term growth rate. In the top right-hand corner, we have a net income CAGR for the last 10 years at just under 24% and earnings per share at 25%. Now, this does take into account the trailing 12 months, so Q1 and Q2 of 2024 and Q3 and Q4 of 2023. But if I remove the trailing 12 months and only use up to the latest fiscal year, which is 2023, I can do this by changing cell M62 from a 0 to a 1. And we can see these fall to 14% and 15.5%. So I feel using a 20% short-term growth rate is right in the middle of these, and that's where I'm currently comfortable with. But when Microsoft releases their full year 2024 results in June, if they're able to maintain a higher growth rate, I'll look at increasing my growth rate at that time. But let me turn this back to the trailing 12 months. And as mentioned, the stock is currently trading in the $400 to $410 range. So let's see what growth rate we would need for that type of valuation. And what I'm going to do is change the growth rate to a 25%. With a 25% short-term growth rate, we can see the valuation jumps up to $490. So much higher than where we are today. So let's look at something a little lower. Let's just say 23%. So with the 23% short-term growth rate, we see intrinsic value comes to $417, so slightly above where it's currently trading in that $400 to $410 range. And if you believe Microsoft can maintain this type of growth moving forward, this might be an opportunity for you, though right now doesn't give much of a margin of safety. However, for me, I still think I'm going to use 20% and I'll wait until the full year results come out. And if they are able to maintain a higher growth rate, I will look at updating my valuation at that time. But let me just turn this back to 20% and then we'll move on. Now, I want to point out all the metrics in blue here, which we did see many of these when looking at the financials. And ideally, I'd like to see all these data points for the time periods listed over 10%. However, in reality, many companies cannot achieve that or even come close. However, we see Microsoft, they are pretty close here. And first, I just want to point out the return on invested capital, which is the most important to me of the five, as it's a very important metric for an investor to look at. And we can see they've been well over 10% and even in the 20% range. So very impressive here that they can maintain such a high return on invested capital over time, showing the shareholders that management is excellent at capital allocation. Then for the 1 year sales growth, it's just below 10% at 7.4. But we'll see in a couple months if this picks up a little more when they release their full year 2024 results. And same thing for the 3 year free cash flow per share, just over 6%. While every other period has been at least 12% or more. But again, we'll see how everything turns out in June when they release their next full year results. Now, we're going to scroll down a little bit and look at a few other data points. PE coming in at just over 36, pretty high. So you really need to believe that they can sustain that mid 20% range growth if you're looking to buy in at the current price. Long-term debt to free cash flow, very low at 0.6, so no issues with debt. And I generally like seeing companies below 3. We can see they're well below that. Dividends growing 130% over the past 10 years, while share count down 10% for that same time period. So two nice data points there. Like as I mentioned, like seeing dividends growing and shares declining. And then lastly, net profit margin. I like seeing companies over 10%, and Microsoft, they are well over that. Last 10 years, averaging 28%, and 3 years, averaging 36%. Now, software companies are usually higher anyway for their profit margins. And overall, Microsoft having very good data points across the board. But let's now move on and we'll perform a computer modeling to forecast a 52-week stock movement. Here in the computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here, and the other random forest. And I already copied all the results and pasted it into Excel as it's a little easier to see there. Well, let's take a quick look at what we have here first. And this data is as of February 5th, this previous Monday. And the far right-hand column is the weekly average stock price for Microsoft. And the column right next to it is just the weekly average for the S&P 500 ETF. And other columns are just other various data points used for the analysis. Now, let's scroll down 52 weeks and see what the forecast is for the stock price. And it does show an initial uptick, but out here in February 2025, we can see it's predicting the stock price to be higher than where we are today, closing at just under $520, so still a nice gain. But let's jump over and we will look at random forest. So same thing with random forest. This data is as of February 5th, and the stock price at that 405.65. And scrolling down to 52 weeks, we can actually see it showing a decline in the stock, closing out in early February 2025 at just over $345. But let's jump over to Excel and look at all this data a little closer. Back in Excel, I already pasted all the data from the computer modeling, and first thing I want to point out is the vertical red line. It represents this previous Monday, February 5th, and everything to the left of that vertical red line is the historical stock price for Microsoft, and everything to the right is the computer modeling prediction. Now let's look at a little history of the stock movement, and we can see back in 2009 it was trading around $20 and had a strong growth, hitting $100 in mid 2018, then jumped up to $330 in late 2021, followed by a decline in the stock price through 2022 and recovering in 2023 to where we are today. Now, let's jump over to another tab and we'll look at all the predictions a little closer. The M5 rule is predicting a high growth rate through 2024, with the stock reaching its peak in the September time period around $595, but then dropping off at the end of the year and closing out the 52 weeks in early February 2025 around $520 for a nice gain of 28% from where we are today. For random forest, it's actually showing the stock price to decline throughout the year with a steep drop off out at the end of the year and continuing into early January 2025. Though it does show a slight recovery going into February and closing out the 52 weeks at about $365 for a decline of about minus 10 to minus 11%. Taking the average of the M5 rule in random forest, it's showing a similar growth trend as the M5 rule, reaching a high of just under $495 in August, but then pulling back and closing out the 52 weeks in February of 2025 at around $441 for a gain of just under 9%. To recap, I believe a fair value to buy into Microsoft is between $295 to $333, with the lower end taking into account a margin of safety. While the current stock price is trading in the $400 to $410 range. Now, Microsoft has shown great financial growth across the board, and the stock price has followed. But it's still currently trading at a price that's a little too high for me, and I can see paying a little bit more than my intrinsic value, but no more than $340 to $350 if I was going to do that. Now, for the computer modeling, the M5 rule is predicting growth to continue for the stock with a 28% gain over the next 52 weeks, while Random Forest has a bearish outlook with the stock price falling about 10% over the same time period. Now, I hope you enjoyed this video and gained some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.